Well, hello everybody and welcome to Williams Corporation Investment Webinar. My name's Costa. I'm stepping in today for Matthew Horncastle, who is unable to attend today, but a little bit more about me in a moment. So thank you very much for everyone attending, and let's get going. So obviously every presentation, especially every good presentation, needs a disclaimer, and this is no exception. You can read this in your own time, but the long and the short of it is that we are just presenting our opinions here today. We're not giving you any financial advice without you looking into it yourself. So please seek your own financial advice and advice about what we're offering today. There will be a question session at the end, and this Q&A will be conducted via chat. So you just send your questions along and I will be more than happy to answer as many of those questions as I possibly can. Here's a little overview of what we're talking about today. Introduction to myself, current property market overview, why residential property, about Williams Corporation Capital, and the Q&A session. Okay, a little bit about myself. So I've been a real estate investor for more than 30 years. I started when I was in my early 20s. And have had multiple properties, property investments and other financial investment, as well as being a business owner, including in real estate, owning my own real estate offices. I'm a senior consultant at Williams Corporation, and I'm passionate about wealth creation. Let's kick off and just talk about the New Zealand housing market fundamentals. And I think this is really important to understand what drives the housing market. Many people are sitting on the sidelines right now because they just don't understand how it all works. But let's look at the long-term trends. And as you'll see in this medium house price graph here, you can see right since records began, house prices have been trending up. The medium house price has been trending up over that long-term period. Now, you'll see little blips along the way, but that's all they are. So, for instance, you might identify 2008. When we had that global financial crisis, there was a dip in the market. Then the market flattened for a while, and then it started steadily increasing again. Then we had this unprecedented season of COVID. Now, in COVID, the interest rates were record lows, and we see this very, very sharp spike there post-2020, where people were just going into bricks and mortar full steam ahead because of the low interest rate environment that we were in. But it was an unreasonable spike, and you can see that by the vertical nature of that spike. It went up so fast that it ultimately was going to have a correction. Now, if you've ever studied any other asset class, whether it be the share market, gold, whatever it is, if you see a spike like that, you'll always see a correction back down to the trend line. And we're almost about at that trend line now. If you follow that line up, we're almost back at that trend line. So what are we going to see next? We've got global issues around the world. Now, we could talk about this all day long. We could talk about wars in Ukraine. We could talk about famines. We could talk about all sorts of instability financially, globally, recessions, inflations, et cetera. But one thing that's most important is understanding New Zealand as a whole. New Zealand as a country is so desirable and so appealing to investors from all over the world. That's why we have queues and queues of people lining up to immigrate here. One of the reasons that New Zealand is so appealing is it's a first world country and it's an island. We don't have border crises like so many other countries, like in Europe or Asia or wherever. And what you'll see here is this New Zealand population growth, another fundamental of driving property prices in this country. You can see since, again, records started, that property growth in this country has trended upwards constantly and consistently. In fact, if we had no barriers or inhibitations at all on our population through immigration, it's predicted that within 30 years, we would reach 10 million people. But even without the restrictions on immigration being lifted, it's predicted that in the next 10 years, we're going to see another 5 million people coming into this country by just pure growth. So this is a major fundamental that drives the economy, but it drives property prices. So here you see New Zealand's population would balloon to 11 million people by 2051 if there were no migration rules. That's just based on the predictions of applications for immigration here and natural population growth. So what does all of this mean and what does it add up to? Well, we'll talk about that in a minute, but here's another driver. How many homes are being built? Now, we've all heard about the government's attempts at Kiwi Build and all of those sorts of things, but they've failed. The governments have failed to deliver enough houses and enough legislation to make it easy to build homes that actually we've gone backwards. In 2017, we were building more than 30,000 homes, and here we are in 2022, and we're below that level of new homes being built. So we're actually not keeping up even with population growth. So we've got some fundamentals that are clearly driving us long term. The average household size is actually starting to shrink. So in 1991, there were more than 2.5 people per home, and now it's well below that. And it's predicted that that could actually go down to 2 people per home. That means without even population growth, we would need more houses because less people are living together. So these trends are actually not just a New Zealand phenomenon, they're happening globally. People are becoming more independent and they're wanting their own space. And this is where the demand for housing continues. And then another fundamental that's driving us, and it's the cost of replacement. Now, again, we've mentioned that New Zealand's an island. It's isolated from the rest of the world. It means that construction cost is always going to be inflated by the very fact that it's hard to get supplies here. Things are continuing to go up, and as we use more product and more land, obviously there's demand on that land that drives the prices up as well. So replacement cost of new homes is not going down. It's not going down, it's going up. So when we take a summary of the whole market in property, you're told that the market acts kind of in a boom and bust cycle where the long-term data completely shows steady growth. And this will continue to be the case. In fact, in New Zealand, house prices have grown by 8% on average for the last 45 years, basically since records began. So perhaps you'll know what your parents paid for their house, or your grandparents, what they paid for their house back then, and now you know what we're paying now. Nothing's going to stop that long term. The fundamentals for growth are medium house price, as we've mentioned, global issues which create a demand for safe havens, and New Zealand is that island nation. It's safe, it's relatively incorrupt. Yes, we've got some problems here, no denying that. But relative to many other nations, we don't have the population density, we don't have the demand for corruption that is present in many countries, and we don't have unstable government. So it's a very attractive place to invest and live, as we all know. We also know that the number of homes being built is not keeping up. It hasn't kept up for years, and we are well below the demand for homes. We're not preparing and we're not building enough homes. And of course, the average household size is shrinking, creating even more demand. Replacement cost of homes going up. All of these fundamentals are putting us in a very strong place for our growth, for the company's growth, for the country, growth in terms of property values. And obviously, as an investor, it's a very, very confident place to put your money. Now, let's just have a quick chat about who Williams Corporation is. Williams Corporation is a residential property developer. In fact, we are the largest privately owned property developer in New Zealand. We provide homes that are affordable to buy, they're affordable to live in, and affordable to maintain, located where you can live, work, and play. We're proud of the homes that we build, and the reason that we have such tremendous growth as a company is because we deliver a beautiful, beautiful home in places where people want to work, live, and play. Quite frequently, we're building in the cities or very close to the cities and their infrastructure, which makes common sense. If you're a busy human being, you want a low maintenance home that you're not tied down to, that's going to be accessible to your work, to where you play, and to your friends. Williams Corporation is constantly at the very top of this report here, which is an independent report, the Building Construction Industry Report, which measures consents that have issued. So it's the most tangible way of measuring growth across the different building companies of the country. And you can see here, just in November, the number of settlements that we had. Now, when we say settlements, we're talking about the homes that we've delivered to our clients in November. So almost $17 million worth of property. And our all-time settlements since we began is 1,501, or almost $900 million worth. Completed developments, average time frame is 6.8 months for the consenting. So there's a lag, obviously, where we are preparing a site for development. And it takes about 6.8 months in total to get the consents from the council, to do our pre-marketing and our sales. And then it takes on average about 8.7 months to actually construct. And that doesn't matter whether it's a 12 townhouse development or an 80 townhouse development. It takes us about 8 months or 9 months to build that development. This means we're a very efficient company. The company is very good at delivering on-time homes of high value. And here's an example of the settlements over the last 12 months. Broken down by Wellington, Auckland and Christchurch. You can see 227 settlements in Wellington, 214 in Auckland and 201 in Christchurch, just over the last 12 months. Here's sales over the past 12 months as well. So tracking month by month, you can see real good steady sales right across the year. And here we've also got the property delivered and the revenue. And it's beautiful to see that the number of homes that we've delivered so far, 879 homes. We've got a total sales value of 428 million. And that's Christchurch, my apologies. If we're looking to the right, of course, we've got the total homes in total, 1,501. Why are our homes so popular? Well, my 3 children have all bought a Williams Corporation property. I myself have bought several of them. I've lived in them. I invest in them. And they are so popular because they are low maintenance. We have safe building envelopes. You can see in this picture here that there's overhang or eaves. We don't have any internal gutters. All of the homes are built with low maintenance materials. You don't need to paint our homes. They've got baked on materials or brick, tried and true. We've got absolutely beautiful design features where we're maximizing every piece of the space. They've got soundproof and fireproof intertenancy walls. They're homes where they're warm, dry, and incredibly comfortable. The other thing about our homes is they come complete with all the appliances. And you can see in that bottom right picture there, we've got the dishwasher, the dryer, the washing machine, the fridge freezer, the oven, the microwave. They come with multiple heat pumps, electric car chargers, double glazing, synthetic grass, beautiful native plantings for their gardens. These homes are homes that people are proud of, but they're also homes that people can live comfortably in for very long periods of time. They also come with a Japanese bidet, which is one of my favorite amenities. Okay, so we're an honest company. We have been in business in the New Zealand property market for over 11 years. Our homes are attractive to investors due to being affordable to buy, affordable to live in, and affordable to maintain, as I've mentioned. And, you know, as we get more and more busy as a society, we don't have time to make repairs to the homes. We don't want to be fixing plumbing and wiring and fixing the leak in the roof. And, you know, if you're an investor or a landlord, you don't want to have to be backwards and forwards to your property trying to sort out issues. When you buy a Williams Corporation home, you don't have to worry about it. These homes are so well designed, well built, and low maintenance. Now, let's just quickly shift over to Williams Corporation Capital, which is our investment arm. Now, again, I just want to go over this legal disclaimer just briefly. You are encouraged to ask questions, read all the documents carefully, and seek independent legal and financial advice before committing to any offer. This is very important. Okay, here's an executive summary of Williams Corporation Capital. At Williams Corporation, we are passionate about building new homes for New Zealanders that are both affordable to live in, affordable to maintain, and affordable to buy. Currently, we have delivered over 1,500 brand new homes to customers. Our financial product, Williams Corporation Capital, creates a secure pipeline of funding, allowing us to continue to build our product that we are wholeheartedly invested in. We believe in our product. Investors are provided with a 10% gross return, and we pay the dividends out on a quarterly basis. Williams Corporation Capital is secured with extensive property and cash equity, and governance is provided by Lane Neve, who is a substantial law firm. Our investors are a key part of our Williams Corporation process, providing key funding so we can continue to build brand new affordable homes in New Zealand. Honestly, I don't know what the government would do if it wasn't for people like Williams Corporation and, obviously for our investors. Now, to be eligible, you do have to be an eligible investor. This is not a retail fund. So you do have to either be a wholesale investor, or there are other criteria for you to qualify as an eligible investor. Now, as a wholesale investor, there's two ways of qualifying. You can either have $750,000 or more in the fund, or you could have net assets of $5 million or more over the last 2 financial years. Or as an eligible investor, you have to have a substantial amount of investment practice in the financial markets as such. This is all governed by the FMA. So it's not something that we dictate. This is dictated by law. So there is a scrutiny process to establish whether you are an eligible investor. If you are an eligible investor and not a wholesale investor, there is a minimum of $100,000 as your investment amount. All of the funds that are invested into the fund are fixed for 12 months. So there is a 12-month lock-in period. The return, as I've said, is 10% per annum, and it's paid out on a quarterly basis, 2.5% per quarter, and we do deduct at source the withholding tax. Now, for an individual, that's 33%. For companies, it's 28% currently, and also for trusts, it's 33%. There are strict operating rules. Now, because it's managed mechanically by Lane Neve, they will follow these rules to the letter, which provides a very high level of security. Firstly, we must have pre-sold at least 70% of a project before we can draw down any funds for that development. We're not to exceed 70% of the completed project valuation. So when it's all and said and done, it's valued. We cannot borrow down any more, and that's including private lenders or mainstream lenders, any more than 70% of the project value. We wanted to create the best available security. So there is B-class shares, which is the first $5.9 million was invested by Matthew and Blair or their entities, but they are B-class shares, which means they cannot withdraw their funds whatsoever, and they are sacrificial. They'll be the first to go. Investors have the benefit of also a personal guarantee and an equity base that's guaranteed from Williams Corporation of $52 million. When funding a project, basically there's 3 levels of security. We are either taking a deed of assignment from the time that we contract a piece of land, and that deed of assignment is straight back to the fund. So Williams Corporation Capital Fund will take ownership of those contracts from the day we sign on a piece of land. And then typically, if there's no other investor involved at the time, Williams Corporation Capital will take a first mortgage over the development, and that'll typically happen in the early stages of that development till we get to a certain level of construction, and then we might bring in a second lender or another first mortgage, and we will step behind that first mortgage with a second mortgage. So you'll see a deed of assignment, a first mortgage, or a second mortgage. These are the various levels of security, and they're broken down for in the prospectus. Also, it's important to know that a third, if there are 2 primary funders, but this is capped at 70% of the entire project value. So no more than the entire of 70% of the entire project value will be funded at any one time. Okay, what's the withdrawal process? So basically, you're locked in for 12 months, as I said, and there's also a 6-month notice period. The details of this are outlined in the information memorandum, but in terms of securing the funds so that we don't have people using us like an ATM machine, you're locked in for 12 months. There's a 6-month notice period. So if you want your money out at the end of that 12-month period, you give us notice 6 months prior. It's also important to know that we don't have any fees. So we're not charging you any line fees. We're not charging you any ingoing fees or exit fees. What you get is the 10% return less the withholding tax. If an investor is purchasing a Williams Corporation property, we will tie your investment so that you can withdraw it to settle that property, even if it's less than the 12 months. So quite often we will have clients that love our properties. They've got some spare cash. Maybe it's equity from a house that they've sold, and they will put down a 10% deposit down on one of our turnkey properties, and they'll put the balance of that fund, the funds that they are going to use to settle that property, into our investment fund and get a 10% return on that while they're waiting for the home to be built. And then they can settle contemporaneously. Okay, here's a breakdown of our total funds under management. And you can see that, we have been very, very steady since December 2021, just in this particular chart, to November 22. There has been very little fluctuations or withdrawals from the fund. We're a very stable entity. Total funds in 2021, 144 million. Total funds as of today, a little bit over $151 million. And here's a history of some dividends that we've paid out. So when we first started the fund, our first year of dividend payout was $34,000. Today, we're paying in excess of $3.8 million, and that's net. Every month, we do a monthly update, and this is extremely important. It gives an absolute transparent snapshot of where Williams Corporation is right now. It tells you how many homes we've delivered. It tells you how many settlements we've had, how many sales we've had in the month, how many houses are under contract. It tells you what we are currently working on. There's an overview from the directors, and it comes with this phenomenal allocation table. The allocation table is incredibly transparent. It tells you exactly every development that we've got in the business and where the funds are coming from and where and how much of or what percentage of those funds are allocated to each and every build. Now, the investment process into Williams Corporation Capital is really simple. There's 3 forms linked by Google Drive. Now, at the end of this presentation, we're going to send a link out to you. You're welcome to have a look. There's no obligation, obviously, to invest with us, but we want you to see what we're doing. Those 3 forms that include the subscription form, which basically is the basic details of how much you want to invest. And then there's a form, which is your AML document. It basically is to make sure that Lane Neve, who's scrutinizing the AML document, can trust the source of the funds. And then thirdly, there's a tax residency document, basically to make sure that you are not a US tax resident, because there's certain strict rules that apply there. Okay, and then it's simply a matter of depositing your funds into the Lane Neve Trust account once everything's been ticked off. In summary, folks, we are good people that run a great company. I've been in real estate, as I say, for many years, and I've worked for a number of real estate firms, different providers, developers, and I've never worked for such a transparent, good bunch of people as Williams Corporation. And I can say that wholeheartedly. That's why my own children are involved with purchasing Williams Corporation property. And that's why I'm one of the leading raisers of capital in the company, because I genuinely believe in what we are doing. We are providing a solution to New Zealand. We're providing a solution to the property crisis. We might not be the whole solution, but we're providing a tremendous attempt at answering the problems that exist here. But more importantly, we're delivering a service that is recognized as world-class And people love what they're doing. I've got many investors who have bought property from me, who have bought multiple times, and so have many of the client consultants. If you would like more information, either as an investor into our property or into our fund, I personally would love to hear from you. Or if you're already working with one of our client consultants, please reach out to them and let them know of your interest. Don't let the fear-mongering of the media, don't let short-term trends dictate your long-term investment strategy. Be somebody that's building wealth over the long term. And all investment should be more long-term viewed rather than just the feelings of today and now. I really want to thank you for listening. It's been a real joy. Now I'm happy to answer any questions that you might have. And our first question is, can you use the money in a fund to buy a Williams Corporation home? You can, but you must have your first 10% available to lock in the property off the plan. And any other funds surplus to that, you can invest in the fund. So good question. Absolutely. What made you want to start Williams Corporation Capital? A great question. So at the end of the day, we wanted an uninterrupted supply of money to be able to continue to grow and to meet the demand of our purchases. One of the problems that many developers have is they don't have enough equity to be able to build the houses that they've sold or want to sell. We've solved that problem by creating Williams Corporation Capital. So we have a number of investment companies, banks that are very happy. They'll bend over backwards to lend to us. But there are also restrictions and extra fees and, hoops that we have to go through when we're going through those entities. In our ideal world, all of our funding source would come from Williams Corporation Capital. And I believe that one day we will get to a place, perhaps it's $300, $400 million in our fund. We can say goodbye to all other banking or investment entities. How long does the investment process take? It depends on a couple of things, but generally speaking, if you complete the forms thoroughly and outline your past history, if you're not a wholesale investor, it will be scrutinized by Lane Neve. Generally speaking, it's about 5 to 7 days to go through the AML process if you provide us all the information. I'm an Australian citizen. Can I invest in Williams Corporation Capital? Yes, the answer is yes. You can. We are actually setting up an Australian version of Williams Corporation Capital, so that is coming. We're just working through the legal documents for that right now. But yes, we please reach out to us and we can explain how we can help you. What is the fund worth now? I think we had it in the slide. 151 million is in the fund currently. That's combining our various funds together. But the bulk of that fund is Williams Corporation Capital. Now, for transparency, you can actually go to the company's office and you can search there for companies, Williams Corporation Capital, and then you can click shareholders. And there you will see every shareholder gets one share for every dollar that they invest. So you can see there transparently exactly at any time how many people have invested into Williams Corporation Capital Fund. It's a nice transparent way of seeing, how many people are invested and how much is invested. What is the process for Australian doing New Zealand fund investment? We'd probably talk more about that offline because it's not going to be relevant to most of you here today. So just reach out to us and we can explain that. But yeah, it's just more documentation. And we can just cover off all the fine details of that in a separate discussion. I believe that's most of your questions. I hope that I've answered them satisfactorily for you, and I hope you've got something of value out of this presentation. I really appreciate your time. And listen, we're human beings. Please reach out to us. We're not going to bite your head off. If you're not sure, if you're sitting on the fence and you just want to have a chat, There is a no obligation process with us. We're not going to bend your arm behind your back. That's why we've got a good reputation in the marketplace. We're not sharks. We're not here to rip anyone off. We're here to build honest homes for honest people and with honest investors. Thank you very much for attending today.